A record-breaking gold price has rewritten the rankings of the world's top 50 mining companies. For the first time in years, precious metal miners, not base metals or battery materials, are setting the pace. The latest mining.com top 50 reveals powerful shifts in global mining value, with newcomers surging stocks and a surprise reshuffle at the top. Well, Frik Els, the editor behind the ranking, joins me now to unpack what this tells us about investor sentiment, strategic pivots, and where mining's momentum may be heading next. Frik, thanks very much indeed for talking to us.
It's a pleasure. Good to be here.
Well, look, Harmony Gold, Gold Fields, and other precious metal miners soared up the rankings that we just saw. Frik, what deeper signals are we seeing in global capital flows towards gold here?
Yes, definitely. Apart from the fact that the gold price has been setting records fairly regularly, it also is an indication of just how volatile the industry can be. While there were 6 new entries into the top 50, which is also the greatest number since I've been tracking it 6 years ago. 5 of those were precious metals companies. So the mining industry, this shifting sands and moving earth all the time.
Yeah, and it certainly does look like, when you look at some of these companies exclusively, they each have their stories to tell, right? Newmont and Agnico Eagle, for example, gaining nearly $40 billion combined. What's behind their outsized performance? And does it reflect broader market conviction in gold?
Yeah, I think there is a longer term trend in investors in mining stocks is they do like specialization, and they do like a laser focus on not necessarily just a single commodity, but they like specialists. So Newmont has been shedding some non-core assets. So it wants its portfolio to be, top notch. Every mine they operate needs to be, at top level. Agnico is, of course, due to the merger, it's now a top 10 mining company. So, but at the end of the day, the price is the ultimate clearinghouse, and mining stocks will respond to price.
Frik, we saw 6 new entries this quarter alone. I'm wondering, what does that say about volatility and market appetite? You touched on that earlier.
Yes, mining has always been a volatile industry. There's so many commodities and they all move at different speeds. But I think what's different this time, obviously, is the added impact of geopolitical tensions in the world. It is the added impact of a trade war and on and off again tariffs, which makes it very difficult to track. You can just take a look at copper. It was hitting record highs at the end of March, and then in less than 2 weeks, it was almost back to a bear market, losing 15-18%, and now it's regained some again. And I mean, the copper producers are very sensitive to the copper price. And so are the big diversified companies who all have huge copper portfolios.
Well, look, another interesting facet for me that's emerged from this is that Canada has now overtaken Australia in total miner value. Exactly how meaningful is that shift?
Yes. So just to clarify, the mining.com top 50 tracks the value of these shares in US dollar terms. So we look at the primary exchange where the company is listed, but then convert to US dollars so we can have a good global comparison. Yeah, so obviously BHP and Rio Tinto has been for the last 25 years in their current form. They have been the number one and two companies, mining companies in the world, and most valuable. So that has always given Australia an edge. But with the addition of more gold stocks, many of them Canadian, and the surge in value of the Agnicos, the royalty and streaming companies, the wheat and precious metals, those companies as a whole, the Canadian representation in the index is not just more companies, but they are exceeding the value, even taking into account that together BHP and Rio Tinto is worth 220 billion when this snapshot was taken.
Look, another interesting feature that emerged for me was the fact that lithium stocks have nearly vanished from the top 50. What's the real story behind that dramatic drop, Frik?
I have to go back to price. And I mean, the lithium stocks also, hurt Australia as a grouping, of course. It peaked at 6 lithium stocks in the top 50. And at their peak together, they were worth, I think it was 80 billion, if not more. And now we're down to a single one, and that is SQM. I think that's just an indication. So with the top 50, I tried. It's like taking the pulse of the mining industry, the global mining industry. So that just gives you an indication of the slump in lithium.
You get precious metals now dominating the list. What should investors in particular take away from these trends? Because it's just a remarkable story piece. When you look at that ranking, it's telling you different things, isn't it?
Investors are looking more and more for specialist companies. They want a dedicated copper producer rather than a diversified company that mines everything everywhere in the world. So that's why you have, and this is, I think it's for the better part of a year now, that Southern Copper is the number 3 most valuable stock in the index. And that goes further down the line. Get something that you do well and concentrate on that. I think that's one of the biggest changes. And you can also see that in the, in the relative valuation of the big 5, or I should say the traditional 5, which is the BHP, Rio Tinto, Anglo American, Glencore, and Vale. They're the big diversified companies. And they have been hammered down quite substantially as well, especially relatively to the index as a whole. So I think that's one of the changes. And also, just generally speaking, with critical minerals is in the news, mining is in the news. I think the industry is also attracting more retail investors or institutional investors, which maybe previously, did not want to get involved in an industry like mining because of the risks. Maybe they're coming into the market as well, and that it's exaggerating the ups and downs that we're seeing.
Look, looking ahead, which sectors or regions, do you think are poised to shake up the next ranking?
It's impossible to say. I still, even though Russian stocks no longer traded on Western markets, I include them in the index because they're doing a roaring business on the Moscow Stock Exchange. Russia is used to have 4 stocks; they're down to 2: Norilsk and Polyus. So, if and when there is a resolution to that issue, and Russia becomes, part of the mining world and the world at large again, I think that there'll be movement there as well. They are a massive gold producer, huge new copper projects coming online there. And the Russian stocks did really well so far this year, also helped by the ruble, which is strengthened against the US dollar, like other currencies, but it's up again, up about 20% against the US dollar. So regionally, I think that is something to look at. That's probably more in the medium term, or hopefully not in the long term.
Well, Frik Els, the editor at mining.com, behind that ranking. Thanks very much indeed for talking to us.